Now, I think there's several factors for today, including positive reactions to key earnings reports. But what really I think is happening is we're seeing more aggressive investors trying to position themselves ahead of next week's CPI report. Now, if that release comes in below consensus, I think it could trigger a monster relief rally. So the positive signs this morning, well, we saw China CPI for August. It was 2.5%. That was down from 2.7%. By the way, consensus was 2.8%. Then Kroger reported. They said supply chains are improving. Management there sees inflation moderating. There are also a lot of other signs and anecdotes that inflation has indeed peaked. If that is the case, is that the buy signal? Joining me now to discuss SureVest CEO Rob Luna, Optimal Capital Director of Strategy Francis Newton-Stacy, along with Kingsview Wealth Management CIO Scott Martin. Rob, I'll start with you because you were already a buyer, but there's a lot of folks on the fence. The risk-reward dynamics right now, if someone had been waiting on the fence of going in before the CPI report rather than waiting for after.
Yeah, look, I'm not a short-term trader, Charles, but I think this is a great opportunity for people who have a 1-2 year time horizon. Look, we said before Jackson Hole, after that big rally, if we were a little bit too hawkish like Powell was, expect a 10% pullback. Well, we've pulled back 10%, and to your point, what we're trying to do now is get ahead. Look at gas prices, look at shipping prices. These are leading indicators. Those are coming down. So where do you want to position yourself? You want to be looking at those growth names now that have pulled back, big names down 40, 50%. If you're an investor long-term, that's where you have to be right now.
Scott, what are you doing?
I agree. I'm agreeing with Rob is what I'm doing and nodding my head because he's right. And Charles, to your point, waiting for CPI, you're just asking to miss something more. I mean, I think like if you're an investor here, and Charles, we've been talking about this on the show, has been talking about it with our buddy Neil Cavuto. It's always darkest before dawn. To Rob's point, if you're a long-term investor, even if it's a year, 2 years, 3 years, 5 years, like, what are you waiting for? You're seeing names come back all the way down, 50%, as you said, 60, 70 in some cases. And if you're waiting for CPI to tell you that the coast is clear, if you're waiting for a godsend of commodity prices to show you that all of a sudden the commodity prices are off their highs big time, then you're going to miss the whole thing. So buy before CPI. And if the CPI is hot, fine. Then guess what? You've got to layer more in because CPI is near peak or at peak or has been at peak, and it's going to start coming down, and that gives the Fed the chance to stop hiking interest rates sometime very soon.
All right, well, but there are risks out there. You just alluded to the Fed, right? So pre-open, we had this big rally. All of a sudden, it almost all went away. What happened? James Bullard, right? By the way, I'm calling him the Lee Van Cleef of the FOMC because every time the market starts hinting that it wants to go higher, you can hear that Sergio Leone music, and he turns around the corner and shuts it all down. Francis, the Fed's dilemma, though, in my mind, is that they keep the pedal to the metal too long. The economy's slowing, inflation comes down, and they actually push us into something we really don't want to be. And that is a danger to the stock market, isn't it?
Oh, certainly. You know, if they are able to thread the needle with the soft landing, I think we've seen the low for equities. However, with the balance sheet acceleration, so in the first 3 months of balance sheet reduction, you had $52 billion come off of the balance sheet. It's now slated to have around $380 billion come off before the end of the year. In that course of the $52 billion coming off, we lost 4% on the S&P 500. So if we have another $380 billion before the end of the year, yes, that could cause some weakness. The other risk in the system is the fact that we're raising rates simultaneous to balance sheet reduction, both at a record rate simultaneously. And the problem is that when you have 61% of Americans living paycheck to paycheck, their credit card payments are getting more and more onerous with the passing moments. Their mortgage payments in some cases are getting more onerous. You know, you just have more risk in the credit market. So I'm watching 5 things to see if traders start to once again, which they're not now, pricing in a harder landing, which is I define as a credit situation. So watching the dollar, which is just pulling back briefly here, watching gold as the safety trade, also the pivot trade, if that starts to kind of take off, watching the 10-year to see if it makes a new high, watching the Fed funds, you know, the Fed Reserve financial conditions, and watching that corporate spread over treasuries. That's a big deal. That's not making new highs. But if that thing takes off, watch out below.
All right. In the meantime, I'm loving the action, right? I love the minutia of the market, right? I mean, this is what I live for, right? And what I'm watching is last week, those SaaS, right, the software as a service names, they were annihilated. Oversold, though. Look at it today. DocuSign, Zscaler up $34. Scott, a whole lot of other things are making big moves, particularly oversold things. So you talked about being in this market. Do you want to do bottom fishing, or do you chase the things that have already gone up?
I wouldn't chase, and there's tons of stuff to fish off the bottom. I mean, as an investor, like, you can't be crazy though, man. Like, we invest money for a lot of clients, as you know, and clients don't want to buy stuff that's like 10% off the bottom. And I'm like, okay, it's down 40%. Like, NVIDIA is up big today, right? They don't want to buy it all of a sudden yet. You didn't want to buy it yesterday when I told you to. So you just have to really take stock of where things are and know that, like, in the long term, like mid to long term, things are going to be okay. These are generational, almost buying opportunities with some of the other companies named. Splunk is another one that's just gotten absolutely slammed. And those are areas that I think you got to start looking to buy into here.
Rob, where are you looking?
Yeah, no, I completely agree. And to your point, what a lot of investors have been feeling, I don't know about you, Charles, but I've been logging into my phone, looking at my own brokerage account, and that 1 month number has been just absolutely frightening. But today it actually turned positive, and I'm in those names. I'm in the DocuSign, I'm in the Roblox, and all that's saying is a whole month decimated my portfolio. In 3 to 4 days, it's been made back. And that's a lesson to these investors out there. You've got to stay the course. And remember, the names that lead us down are the names that lead us out. That's going to be communications, consumer discretionary. The names that are rallying today,
right.
Don't get overloaded into the safety names, the energy names, and the staples right here.
You know what? I never look at my own account. My broker just calls me up. I don't. I tell you what, I scored big time so far because right before June, I loaded up on Etsy and Roblox, and I did see him go across the tape. I'm up huge, but I tell my guy, call me every time they're up at least 100%. So I don't get a lot of calls. Francis, to the point that was made earlier, right? So many stocks are trading below their 50-day moving average, a whole lot even under the 20-day moving average. How do you go about, you mentioned your 5 things you're looking at from a macro point of view. From a more micro point of view, when it's time to, okay, let's take advantage of this circumstance. How do you go about it?
Yeah, so it's just about the consumer and how far the expectations for earnings actually come down and how many, sort of inventory overloads they have and how much they have to discount that. That's really what comes into play. If you're looking for quality names, you're looking for balance sheets, strong balance sheets, those things are always going to thrive. And remember, even if we get bad news in the credit markets, the Fed is going to pivot very quickly to protect the plumbing in the financial system. He may say, I don't care about equity prices, I'm bringing inflation down, but he does care about trade settling. He proved that during COVID, and he proved it in the third quarter of 19. I still like the defensive sectors. I do like uranium just because it's a commodity that has a lot of demand out there. And I think duration and gold have gotten cheap if you want to kind of get a little bit more defensive ahead of the end of the year in the fourth quarter.
You're not worried that gold should have made a big move according to the old script by now?
It should have. I mean, real rates are rising, right? So that's one thing to consider. But gold, if the recession narrative starts to take over, so we had inflation, stagflation. If the recession narrative starts to take over the inflation because CPI has peaked, you're going to see some interest in gold for sure.
All right. Hey, I got 30 seconds. Real quick then, Rob, what can change your mind? I know you're a long-term investor and it takes a lot to get you off track, but is there anything lurking out there that has you worried?
Well, I don't know. Like I said, I'm looking at shipping rates. I'm looking at energy. Those are coming down. All the input costs to the CPI are moving in the right direction. If that somehow goes the opposite way, there's a bigger shock than I'm anticipating, and you see rates skyrocket above that 3.6 on the 10-year, that's going to start to change my mind, at least in the interim term.
The only thing that's scaring me, right? I'm sorry, say that again real quick.
I was going to say, rents aren't going the right way, Charles. One thing real quick, what makes me nervous is everybody starts turning bullish here after they get the picture. That would be scary. Stay bearish because that's what makes the market goes up.
I was just going to say, the things that scare me is I'm getting a little bit too excited right now.
Yeah, dude.
Rob, Francis, Scott, have a great weekend. Thanks a lot.